Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, March 19th, it's March 18th, sorry, 2024. We had a pretty big gap up today. I'm not really too sure what the cause was or, what the reasoning, but, we had this massive gap up higher and when I was talking into the room today, saying that this is going to be some heavy resistance. It's going to be right between that 5178 and the 5188. So when we gapped up to these levels, my original thought was to, look to write some kind of vertical call spread where we're looking for some backing and filling. And I ended up just waiting because the thing is this is that when we looked at the 15-minute chart here, even with this gap up, we didn't have any bearish divergences in place. And again, just using history as our guide, we have not seen a top without a sell signal on at least the 15s. So the safest trade, it would have been a really easy trade to write the 5180s or 85, even the 90s up here, and let it come down and really look to sell the short side of it once we got into this support area. So it came down, it pretty much did exactly what I thought it was intraday, found support, started bouncing around, and towards the end of the day, this is a little, curious candle because there was some selling in there and it broke this support, but towards the end of the day it kind of rallied back up right near that 5150 and plus 32 for the day. So um there's a lot of gaps here in both directions. It really is a pretty sloppy chart overall, but it looks like it's just consolidating from these highs here, and being we don't have the sell signals, it's suggesting that we're still going to come up and make that run somewhere up into the 5178, 5187. But the thing is that we have, Fed meeting on Wednesday. So that was one of the reasons why I wasn't really too much of a believer on this big gap up, is because, it's a pretty risky trade. Going with, but buying, going into a buying frenzy as we head into that. So, it's a little, I was still kind of scratching my head on what the rhyme and reason for this gap up was. But in any case, let's do it. So if the Bears, they took it through this support towards that, like, really the last 15 minutes. So our range right now is getting moved up, and obviously it's going to be, we could even just say it's here. This is the top of the range. Here's the bottom of the range. Everything else is kind of in the middle as well. If we just kind of put our middle line, pretty close to where the middle is, you can see this is, where the support was. Then when we broke through it, it was used as resistance. So this is, going to be pretty important. We could even lower this a little bit and say right around here, because this will have the moving average right here at the 5140. You can see support, and then when we broke through again, it was being used as resistance. So this is going to be pretty important right around that 5140 level. If the Bears get it through, then you have to expect that they're going to come down and close this gap or test these lows again. If they hold this level and come up, I still think there's going to be sellers waiting up here, anywhere between this 5180 and the 5188. So until we break out of that, we could see chop. And like I said, we have the Fed meeting on Wednesday. I think pretty much everybody knows nothing is going to happen. He's not going to raise rates. He's not going to lower rates. He's going to leave it as is, and a lot of it has to do with what he's going to say. So you got to be a little bit careful when we go into the Wednesday time period, because it's going to be pretty volatile, and they typically what they're going to do is try to trap one side, and you can see the gap up washed out all the bears, and the bulls started buying, and then from there we had pretty much nothing but selling after the first 45 minutes. So even though we were up 20 32, it was anything less than a really bullish day. If it was going to be bullish, we would have had this little dip and then we would have been back up there. But in any case, they're still finished 32 points higher. So um again, the lack of sell signals is, just using history as the guide, saying that we're going to come back up and break this high and test these, or again, if the Bears can push it through this the 5140, then we're looking at a move coming down to close the gap right around that 5120. So that's really it. You just got to kind of take it day by day. You got to be a little bit careful as you head into Wednesday. You just really don't know what's going to happen, and I don't want to see anybody get in trouble with it. So let's go to the 60-minute chart here. You can see we never really got into extreme overbought levels. Kind of just neutral right there. You can see this is the 50-day moving average. This is pretty much where buyers should be waiting. And if they don't, again, we're going to come right back down to the 5120 and close this gap, or even come down to the bottom of the range and at the 5105. If that gets lost, we have this support at the 5090, but most likely we'd be coming into the 5064 area to make some type of low. So I would stay kind of open-minded tomorrow. Watch for the resistance, watch for support, see how things take shape up. But I really wouldn't be looking for any big position trade on this. So just looking at this is that credit spread trade. Now, I said I was doing something a little bit different where instead of doing the spread with the calls and the puts on it, I knew the market was going to be coming down. So instead of writing the put side of it here, like I said, I should have been writing the call side. I just wasn't sure if they're going to continue higher. But when we got this move down, it came right into the support area that I was anticipating, which was going to be this candle, or yeah, pretty much this candle right here. So once we got into it, I just wrote the short side. It spent the rest of the day going sideways, and it's a $950 win. I mean, that's if you let it go into expiration. When I sent everything out, I said it was 900. Maybe you got 850. Maybe you got 800. It all depends on what your fill was, but still fairly. There's not a whole lot of stress in that trade at all. A couple times we were down a couple $100, but that fixed itself. And really, the main reason was there was just a lot of support down there, and I did not believe that the bulls were going to be able to push through it. But even though towards the end of the day, this was a little bit dicey for the bulls on it, and it's really not that bullish of a candle, so they need to try to fix things. So another decent little day. Like I said, we could do 900 a day. We're doing pretty good for the year, man. 4,500 dollars a week on not really putting a whole lot of money out, and just getting within a range is a lot easier than trying to figure out which way this market's going to be going and why. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.